Hey everybody, thanks so much for joining me. Before we get started, please take a minute and click subscribe to my channel if you don't already. And please check out the link you see on your screen for a message from my sponsor, The Motley Fool. It's the best way to support the work I'm doing, and you can get the top 10 stocks to buy right now. So, although the banking crisis that we saw earlier this year, where a bunch of regional banks ended up going out of business, it's pretty much over. But that doesn't mean that the banking sector has recovered. There are a lot of banks that are still trading for very great valuations. I've talked about a few that I own before. Bank of America is still my biggest bank investment and one of my largest investments of any kind. I own some shares of Wells Fargo too, and a few others. But there are some, especially in the regional banking category, that are really on sale right now. One in particular that has caught my eye recently is Truist Financial. Ticker symbol is TFC. They are a regional bank technically. They're primarily located in the southeast. They're in 17 different states. They're in South Carolina, where I am. They're in a lot of other states in this area. They came from the merger of BB&T and SunTrust a few years ago, and they've been beaten down just like most other regional banks. The stock is 20%, I'm sorry, the stock is down 30% in the past year, even after the rebound when the kind of the dust settled from the banking crisis. It trades for less than 80% of its book value. It pays a dividend yield of about 6.4% right now. And that's despite the fact that it's not in the same boat as a lot of other regional banks. For one thing, its assets are well above the limit that put it in the too big to fail category. Specifically, that's called a systemically important financial institution and requires the bank to have over $250 billion dollars of assets. Truist has more than double that. It has a very healthy deposit base. Nearly 60% of its deposits are FDIC insured, and it has great relationships with its customers, and it is in some of the highest growth markets in the US. I mentioned it's primarily in the Southeast. These are states that generally have above average wage growth, job growth, and their economies are just doing very well right now. So Truist is one that has crept onto my radar. I wouldn't be surprised if that is included in my next monthly stocks I'm buying video. Another one that I already own, but I'm considering adding more to right now is Goldman Sachs, ticker symbol GS. Not a regional bank, but it's still been beaten down. It's about 20% off its highs. A few reasons for that. One reason is its consumer banking division is kind of in disarray right now and is being wound down. But Goldman Sachs has a great track record of doing well no matter what the market's doing, and that's especially true if things start to go poorly. There are certain parts of Goldman's business that do well with volatility, specifically its trading desk, which usually is the highest revenue generating part of the bank. Um, right now, interest rates are very volatile. That could be very good for fixed income trading revenue. I wouldn't be surprised if that surprises investors when they report their earnings in the next couple of quarters. So Goldman Sachs is one that I'm still watching. A great track record of repurchasing stock, still doing so. Just raised their dividend by 10%. Starting with their July dividend payment, they're going to have a 10%, or I'm sorry, a 3.5% yield, and it's just looking really good for the bank. Last but certainly not least is Ally Financial, one that I've been slowly building a position in over the past year or so. The stock is down about 20% over the past year, just like Goldman. It trades for 75% of its book value. So, on a price to book multiple, it's the cheapest of the three. Ally is primarily an auto lender. It was spun out from General Motors a while ago. This used to be GMAC Financial. It was spun out from General Motors, so it still primarily is an auto lender, but it is mostly a prime auto lender. They're actually the biggest prime auto lender, meaning good credit borrowers in the country. The average FICO score of its borrower is 691, which is just below the national average. So they're a very selective lender. They only approve 31% of all loan applications they get. And it's a very profitable business model. It's designed to do really, really well and provide a lot of wiggle room, even if things go poorly. In the first quarter, in the current interest rate environment, Ally's average loan was made at an interest rate of just under 11%. So even if it has a little bit of a default in there, like a 2 or 3% default rate, which would be high, it's still designed to make a nice profit. Most of its loans are covered by low cost deposits, and that's just a recipe for a great banking business model. This was attractive enough to get Warren Buffett to invest, and I see why he likes it. So those are three in particular that I am looking at right now to adding, or in true the case of Truist, starting a new position in. I'd love to hear what you think. Please leave me any questions or comments you may have. I'll do my best to address them all individually. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times. Go to fool.com/Frankel to get your 10 stock picks now. That's fool.com/Frankel. The Motley Fool Stock Advisor returns are 483% as of 6/26/2023 and are measured against the S&P 500 returns of 127% as of 6/26/2023.